Hey everyone, Jeff McGinnis. It is so good to see you. I hope you have great 4th of July plans and that you're going to enjoy yourself out there. It's going to be an amazing day. It's great to celebrate the 4th of July and the independence of our country. Now, it is now the month of July, and we're going to take a look at what happened in June with the rates because it is rate watch report time. Quite frankly, I would have expected a lot better rates given the fact that our numbers for inflation have been coming down. I'm going to play with some of these charts and show you some things that I've been observing, and it's fairly indisputable. Inflation is coming down. Our year-over-year numbers are better. When we look at the charts for the bonds, though, it's a little bit confusing. Then I want to talk to you about who I really want to talk with, because I think there's going to be blood in the streets soon for buyers. And so I want to make sure that we're talking to the people that are financially ready and emotionally ready to buy now versus when rates get into the fives, when they get into the fives. So let's go over some inflation numbers real quick, and then we'll get into the bond charts and then review who I'd really love to chat with today. Like right now, I think that there's a great window of opportunity for people to take advantage of this market. So hang tight. Let me switch to our charts. Okay, guys, so take a look at this chart here. I'm looking at, this is CPI, right? This is our CPI numbers as published. Let's look at, here's our May number, 4%. Here is our May 22 number, 8.6%, right? So we are replacing better and lower new numbers with higher old numbers, which is what we've been talking about all year. We're going to have the June numbers come out in July for 2023, and that's going to be a big replacement. If we continue on with the trend that we've been seeing here, and you'll notice it here, if we continue on with that trend, we're going to be replacing a 9% number in the month of July with something hopefully in the 4s, perhaps in the 3s. We don't know, but when it comes out, we can clearly see that our inflation numbers are getting better. And this is what I've been telling you guys for the last year. A lot of people have been asking me these questions about, hey, when are rates going to come down? And that's one of the components is inflation. When inflation comes down, we'll see better rates because that's what happens economically. The bond market performs better with lower inflation, and so does that's the overall economy. So let's take a look at the bonds. And when we take a look at this bond chart, again, red is bad, green is good for you as a consumer or a real estate professional hoping for lower rates. So here's where we started in June, and here's where I'm recording today. So it's almost the end of June, and not a great day for the bond market. And what happened today was that the market interpreted the jobs report that came out today as not as favorable as they would hoped for inflation numbers. And that's another component that we need to be taking a look at is unemployment. You can see we've pretty well come out even for the month. There's not a lot of huge change, despite our inflationary numbers coming down. And we're just going to have to push our patience button, wait for things to go through the system. The Fed hikes that have been going through the system have clearly taken an effect on the inflation numbers in CPI, so we're just going to have to wait it out a little bit. So the rates really haven't changed a great deal over the last month. Now let's talk about who's going to be potentially a big winner in this particular environment. It's going to be the folks that are going to be able to move past emotionally the current rate that they have that maybe has a 2, 3, or 4 in front of it, and want to either upgrade or downgrade their home when the rates have a 6 or even a 7 in front of it. It's a hard pill to swallow. I get it. But let's run through this. So if we have a bunch of people that are sidelined as a result of the rates being elevated, right? That means that more people are either afraid or unable to purchase. So if you're brave and able to purchase right now and understand these numbers, the price of the home that you're going to purchase is a good deal. Because if our inflation numbers go down and the experts that we follow are right, which is, you know, a greater likelihood than perhaps the doomsayers of rate prediction. So let's say it goes into 5s. There's a 5 in front of the interest rate in, let's say, 6 to 18 months. Well, guess what? There's going to be a lot more people coming in to buy, and it's going to be a bloodbath in the streets for buyers. It's going to be hard to find a house to buy because there's so many other people that will be going to buy. So now is a great opportunity while the interest rates are somewhat elevated, provided that you can emotionally tolerate this particular concept and agree with it. So not everybody's going to agree with me. Not everybody, and hopefully I'm right. I could be wrong. We just don't know. But more than likely, if this scenario plays out, we secure a price of a home here while the rates are a little bit more elevated. And then when everybody comes back into the market, guess what's going to happen to the price of the home? So it's better to be in the boat while the tide is rising as a result of mortgage rates going down. So I would like for you to introduce to me the folks that you've been hearing talk about high rates. I'd love to buy a house, but the rates are too high. I'd love to move up, but the rates are too high. I would love to chat with those folks to run through the numbers to see if it really makes sense, because I truly believe that now is a good time to explore that. And the answer may be no. Maybe they're not emotionally ready or fiscally ready to do that. But I'd love to help these folks make a good choice on what they think they would like to do. And the only thing that's holding them back potentially is the elevated interest rates, or they think that rates are too high. At any rate, I hope you have a great 4th of July. I'm super excited for it myself. And if there's anything I can do for you, please let me know, and look forward to catching up with you soon. Take care. Bye-bye.